In this video, I'm going to show you the ultimate parabolic SAR indicator trading strategy for day trading stocks, forex, and the cryptocurrency market. This indicator strategy, when used well, can increase your profit margin drastically when trading. So let's get to know the basics of this indicator and how to apply it on our charts. The parabolic SAR indicator is a popular technical trading indicator that is used to identify the direction and magnitude of a trend. This indicator was created by J. Wes Wilder Jr., who also created the RSI and many more other common indicators that we use now in many strategies. To let you know, the acronym SAR stands for stop and reverse because it identifies when an asset will either stop or reverse its trend. The word parabolic refers to the shape which resembles a parabola. So for us to be able to understand and read the parabolic SAR indicator, I'll be using the TradingView platform. Go to the indicator section, type in parabolic SAR and choose this option. From there, go to the settings. In the style area, change the color from blue to white for easy visibility. On the chart, the indicator appears as a series of dots above or below the candlestick. A dot below the price is considered a bullish signal. A dot above the price indicates that the bears are in control and that momentum is likely to continue downwards. When the dots flip, it indicates that the potential price direction change is underway. For example, if the dots are above the price, a flip below the price could indicate a price increase. As the price of a security rises, so will the dots. First, slowly, then quickly picking up speed and accelerating with the trend. As the trend develops, the parabolic SAR begins to move faster and the dots quickly catch up to the price. So to calculate the parabolic SAR, we use the highest and lowest price as well as the acceleration factor to determine where the SAR indicator dot will be displayed. The formula for parabolic SAR is as follows, where EP is the extreme point in a trend, which in other words means the highest point reached by a price during an uptrend or the lowest price reached during a downtrend. AF is the acceleration factor, which is initially set to a default value of 0.02 as we have seen earlier from the indicator settings. Results obtained from the calculation above create a dot that is plotted against the security price action, either below or above it. The dots help to determine the current direction of the price. So is the parabolic SAR a good indicator? This chart shows that the indicator works well for capturing profits during a trend, but it can lead to many false signals as shown on this chart when the price is moving in a sideways direction. This is why, like just any other trading indicators, it can be used as a standalone indicator if you want to maximize on your profits. To modify the parabolic SAR to suit our trading strategy, first, the SAR indicator has two settings, acceleration factor also called AF and maximum acceleration also called MA. These are set to 0.02 and 0.2 by default. By increasing the acceleration factor, the indicator will track the price more closely, leaving less space between the indicator and the price. This means that the chart will show more trade signals and reversals. When the acceleration factor is reduced, the indicator moves slower, leaving more space behind the price and the indicator. So the maximum acceleration functions the same, but to a much lesser extent. During a strong price movement, the maximum acceleration limits how quickly the indicator can accelerate. Changes to these settings will have a smaller impact than changes to the acceleration factor. The parabolic SAR, like any other charting indicator, works well in any time frame. So consider your trading strategy when deciding on the best time frame. Short-term traders who want to enter and exit positions quickly may choose a higher acceleration factor, which means that even minor price reversals will force them out of a trade. Long-term traders who intend to hold their positions may reduce the acceleration factor. As a result, larger price moves will be required to cause a reversal, and reversals together with trade signals will occur less frequently. So let's check on how we can use this parabolic SAR indicator for day trading. When I was backtesting this indicator, I finally found out the best strategy with a high win rate, but we'll start with the most common strategy. This first strategy is very simple, and it involves trading parabolic SAR signals only. Like in this chart, when the first dot appears below this candlestick, we take a buy position, putting our stop loss below the previous swing low area, and exit our trade on the next opposite signal, which will be characterized by a dot appearing above this candlestick. This is a simple beginner-friendly trading strategy and only works well in a trending market. We all know when the market starts to trade sideways, like in this area of the chart, we'll have many false signals, making us to incur huge losses. This second strategy I'll talk about is what we call the parabolic SAR pullback strategy. This strategy is slightly more reliable than the first one. In this strategy, we only trade in a trending market, and this can be assessed by checking swing highs and swing lows in the market. In a downtrend, we expect lower highs and lower lows to form, as we can see in this chart. When the market meets this condition, we wait for a bullish pullback to happen, like in this area. Then we get a sell signal from the SAR indicator, which is confirmed by this dot appearing above this candlestick. We take our trade, putting our stop loss slightly above the SAR indicator, and target a 1:2 or a 1:3 risk to reward ratio. Let's take another example. Here the market is in an uptrend, and this can be confirmed by this higher high and higher low areas being formed. We wait for a bearish pullback, and as you can see, it happened at this area. We wait for the SAR buy signal, and it's confirmed by this dot appearing below this candlestick. You can take a long position, putting your stop loss below the SAR indicator and target a 1:2 or 3 risk to reward ratio. Now let me show you this last strategy, which is an advanced but easy parabolic SAR indicator strategy with a high win rate. To make this strategy more reliable than the first two strategies, we will add two simple trading indicators. These indicators are the double exponential moving average, also called DEMA, and the ADX indicator, which is also called average direction index. When the price is trading below this long-term moving average, SAR sell signals will tend to be more reliable. This is because the price falling below a long-term moving average indicates that the sellers are in control of the direction, and that the recent SAR sell signal could be the start of another lower wave. Similarly, if the price is above the moving average, we concentrate on buying signals. In this case, the SAR indicator can still be used as a stop loss, but short positions are not advised because the longer term trend is still up. So for us to buy or sell above or below the moving average, we need to ascertain if the trend will be strong for us to book more profits and not to be stopped out within a short period of time. And this is where the ADX indicator comes in handy. This indicator will show how weak or strong a trend is depending with the values. For example, ADX value of 0 to 25 represents absent or weak trend. Values of 25 to 50 represents a strong trend. Values of 50 to 75 represents a very strong trend. And finally, values of 75 to 100 represents extremely strong trend. If you want to understand more about this ADX indicator, I'll put a video link in the description for you to watch, or you can click this link above to watch the video. Let's take an example trade on this chart. The market is above our 100 double exponential moving average. We can only look for a buy signal from the SAR indicator, and this can be confirmed by this dot below the candlestick. Then we check the ADX indicator strength, and as it shows, the value is above 25, which means a strong trend. We can take our trade putting our stop loss below the SAR indicator and target a 1 to 2 risk to reward ratio. Or we can exit when the ADX falls below 25, like in this case. This results to a profitable trade with much more reduced risk. To take a short position, we wait for the market to be below the double exponential moving average. When we get a SAR sell signal being confirmed by this dot above the candle, and when we observe keenly, we can see the ADX is above 25, indicating a strong trend. Take a trade putting your stop loss just above the SAR indicator and target a 1 to 2 risk to reward ratio, and this also gives us a profitable trade. The good thing about this indicator is that it doesn't repaint. Once the parabolic SAR dots are plotted on the chart, it will remain there even after changing the time frame. After backtesting this strategy 100 times, I ended up with a 58% win rate, which is very good in any trading strategy. Though remember, the results will slightly vary depending with the assets used. You can trade with this strategy and give your feedback in the comment section below. Don't forget to subscribe to the channel so that you don't miss my next video, which I'll be uploading very soon. Till next time, see you.